Hello friends, Nalinakshi Swami here. Today's trade, it was a difficult trade, but how you can make it as very simple way of trading. What happened in the market is, I'll go to 15 minutes time frame. These were the candles actually. First 15 minutes, market started and opened higher. That is the level. Opened to the level of 18,089.7, and then it started coming down. So this is the first 15-minute candle, another 15-minute candle. So let me remove this drawing. Let me remove this indicator also, so that you will understand very easily. Actually, after 30 minutes, price started stabilizing. Price made a low of 17,972.3, and then it started moving higher. So this thing, this is the liquidity injection. So price immediately you should not enter into the market. I waited. This went up to this level. You can see 3 green candles for nearly 45 minutes. It made an high of 18,013.95. And later, you can see a big candle coming, red candle coming over in, they sold off. Sold off to the level of 17,961.0. So what did they do? They trapped all these buyers. When they trap all these buyers, usually I look for buying opportunity. Usually I mark the low of this candle. Low of this candle. That is 1 minute. That is 17,961.10. 17,961.90. This was the low. And so when you see this setup, what you have to do is you have to draw the range. Draw the range from white candle to white candle. If you see here, in this candle itself, there is a movement above this white candle. So what is the high of this candle? 18,015.75. 18,015.75. So it is needed, actually, you have to note it down. Sometimes in 10 points itself, market will turn around. So it made a low higher than high of the previous white candle was green candle 18,013.95, and this made an high of 18,015.75. And here what it did, it broke the level of these white candles and made a low and closed inside. This is a trap candle. Trap candle. trap candle. So I saw the change in behavior in this candle itself. This is this candle itself. Change of character. I'm seeing the change. CHOCH. Sorry. Change in character of this candle. So immediately you should not take the trade. What happened? Next candle is the green candle, and the follow through candle was a made a high of 18,033, and then I'll drag this range. So visibly, this was not very visible. So this candle made a low of 17,961, and this candle made a high of 18,033. So this confirmed me that market is going to go up. What it is showing? Higher high. But it closed inside the range. So you need to wait for the price to come back and hold this level. Or otherwise, if in this candle itself aggressively, you can enter. I'll explain it to you. See, when the range, so expand this box and move this box to here. So price came down. You can see from this slide high, this was a trap. So it came down and it made a higher low. You could have gone long in this candle, or you could have gone here itself, keeping it as a stop loss. You should not worry. Later is the story. It went up to 18,095.45, and this was the high of 18,089.0. 18,008. This is also same thing you have to follow, and you can make out where the reversal will take place. Now I am going to explain only this area. So let me go to the chart of option. 17,900 call option, because I selected this call option because it was in the money. In the money, usually we will not hold the call option or anything because of the lot of whipsaws in the market. This is how exactly it is replicating the Nifty chart. See, it made a low of, this candle made a low of 148.25, and this candle, trap candle, another candle made a high of 201, and it retraced back to the level of 162. Even if you would have bought at 158, you wouldn't have lost anything. You wouldn't have lost anything. It made a low of 163.10. So if you would have taken position here itself, so by seeing this structure itself, you can make out it is going to, the price is going to go up. Another clue is, see the candles over there. In that consolidation area, you are seeing all the green candles, only 2 red candles. That itself shows buying is taking place. That is another clue. And then price broke through and made a high of 154. From 162 to 254, it is nothing but 90 points. Or otherwise, if you would have bought at 158 or 148, you cannot, because you will be in panic actually if you start going In live market, you will not be able to decide that. So if it is an 148, from 148 to 254, it is 64 plus 54. Almost 100 points you could have gained in the option call option buying. And here you could have sold it from, if you would have sold the same call option around 252, you could have cashed in. It went up to 160. 252 to 116, almost 100 points, more than that. So this is how you can enter exactly. And I'm going to show one indicator. This is the indicator I use it. If you go to the trading view, in trading view, higher high, lower low, live. This indicator, if you apply, it will plot on its own. Plot on its own. See, here, when the price came down, it plotted higher low and lower high. And it plotted high also. It is lower than this. This is nothing but trap candle. If you see this trap candle, and this is also a trap. Trap to the upside. So liquidity injection. So liquidity is sitting beneath this levels and above that level. So liquidity grab has taken place. Price started. You can buy for this level, for this much move itself. For example, it started from 17,962 to 18,031. 70 points. 70 points, almost 60 points you can gain in call option. Little bit premium. I mean, when there is 70 points gain, you will get how many points gain? 148 to 201. 148 means 50 plus 50 points you are getting. And this structure, this setup will tell you the direction of the market. Lower high, low, high, higher low. You can go long, it will plot automatically. So you can go long in this area. So you could have made this much of money. This is how you can trade wisely. But while coming down, see, there is also a consolidation over here. It is not plotting anything here. This indicator is not plotting any low or high or anything. So, and also if you carefully observe, there is no trap actually, trap to the upside. This white, see, this was the high, this was the low. This was the high and this was the low. Not from the green candle. So there is no trap from the buyer candle. So definitely when there is no trap on the upside, there is no buying pressure. Market will go down. You can hold this position for shorts, you can hold it and it will go down. I hope this will help you to take trade, intraday trade by seeing this. So as far as my knowledge goes, I've explained it to you. Probably it will help you traders to take trade wisely. Thank you very much. Nalinakshi Swami signing off.